Let me show you how to buy a car if your credit is less than stellar. If you don't know who I am, my name is Tommy. I've been in the car industry for most of my adult life. I've done sales, I've done finance, I've done everything in between. Now I help people buy cars. Enough about me. Let's talk about getting you approved. I've gotten thousands of people approved, so I promise you if you follow this video, you're gonna have a much higher chance of getting the car of your dreams. As you guys know in these videos, I go more in depth. I don't just give you the answer, I give you the why because I think it's gonna better equip you to negotiate your own deal. So let's talk about what makes a bank approval. People make the big mistake that thinking an auto loan is all about approval. If I have an 850, I'm gonna get approved. If I have a 300, I'm not. But that can't be farther from the truth. I can tell you I've done thousands of deals. I've seen 400 gets approved and I've seen 850s get denied. I'm gonna go into detail to explain what you need to actually get a loan approval no matter what your credit. This is the best way that I can describe it. If we're talking about an auto loan approval, let's imagine you have a stool, the thing you sit on, okay? Now, normally a stool has 4 legs and there's 4 parts to an auto loan approval. And I'll go through all those in just a minute, which is ability, stability, equity, and credit. Now, if we're looking at a stool and you're thinking about making a stool with 4 legs, obviously you're gonna be able to sit on it, it's gonna work just fine. One with 3 legs, probably gonna work, but sometimes it doesn't. One with 2 legs, probably not gonna stand, but maybe with the right balance it will. And one with 1 leg will never stand on its own. So when we're looking at an auto loan approval, we really wanna have 3 out of the 4: ability, stability, equity, and credit. So let's break those down. The first thing we're talking about is credit. Now we're talking about credit. The only bureaus that matter is Equifax, TransUnion, and Experian. And every bank is different. I'll tell you 90% of the banks that I work with normally take in TransUnion. I've seen a few of them take in Equifax, a few of them take in Experian, but the majority of banks nowadays use TransUnion. Don't ask me why, that's currently the trend. It has changed over the years. Now, I always say with credit, it really is the determining factor of your interest rate more than anything. Obviously, there's other factors that play into it, but the baseline, if we're building your interest rate, comes off your credit score. So if you have this quote unquote leg, you normally have something at least above a 650, 670, something along those lines. It means you have decent credit, enough that a bank's willing to give you a chance. So let's go into equity. Equity is also the other one that we talk about, which is how much equity do you have in a loan? Well, how we describe that is LTV, loan to value. And that is the percentage of the loan to the value of the vehicle. Realistically, with great credit, you might be able to get 130%. I'm saying pushing it. I've seen loans as high as 150, 60, 70, 80. Those are absurd. Those are weird circumstances. Realistically, you want to keep your loan to value as close to 100% or below as possible. So that is why we say cash is king. If you have a worse credit score, if you have a 670 or below, 650 or below, getting this equity leg is a huge leg up. Not only is it equity in the loan, but if you can show a bank you can save money and actually use that money towards not a loan, they are more likely to give you an approval. Quick side note, because I can go on to this for hours, but when we're talking about a vehicle when it comes to credit approvals, you really need to mitigate the risk for the bank if you have worse credit. So what you're looking for is a newer car, something within 5 years old, something under 80,000 miles. That price point, $18,000, might not get you there. You normally want a car, you don't want a truck or an SUV, you want to start with a car. I understand it might not be your dream car, but you are not marrying this car, you are using this car to rebuild your credit and get you to point A to point B. So understand when you're looking for, when you have worse credit, you have to be a little bit more flexible on the vehicle and you want to make sure the risk is mitigated. I've seen so many people walk in and say, I'll just buy a $10,000 car because that's little risk, but it has 170,000 miles. The problem is if that thing blows up in 10,000 miles, you're probably not making payments, and guess what? The bank gets screwed. If it has 50,000 miles and it's a 2019, you're probably going to keep making the payments because it's a reliable car. The third one is stability, which is how stable are you? So the things that banks are looking for is how often do you move? Do you keep your house for 7 years and you live there? Or do you move around every 3 months? The same goes to your job. Being more stable means you're more reliable, means you're less risk. So if you've kept a job for multiple years and you have been at the same house, that's a good sign. So stability is the third one. You want to have that leg as well. The last one's ability, and that's your debt to income. People call it DTI. Your debt to income is how much money you have coming in versus how much money going out. And when we're looking at this, first off, it's pre-tax, not post-tax, so it's important. And things like rent, we want to make sure we're splitting between everybody who's paying it. So if you have a house that 4 people live in, instead of $2,000, you're paying $500. So make sure you understand that. But your debt to income needs to be below, at bare minimum, 50%. It should be below 36%. Below 36% puts you in that great category. Anything above 36 to 49 is like an adequate, something along those lines, but it would still count as a leg. And you might say, Tommy, why is this important to me? I'm not trying to be a finance manager. I'm trying to get approved for a loan. I think it's extremely important because if you don't know why you're not getting approved, you will never know what to improve upon. People just think it's credit score and that's it, and that's not the answer. So when we're looking at an auto loan, especially for somebody that has questions on it, you want to have 3 of the 4 legs. Once you have that, you want to work on getting pre-approved. Your best shot is always to go to your local credit union, the one that you've used for your entire life if you have one. If not, go to your local bank. But in worst case, I say go to credit unions. They're more forgiving. If you haven't been able to get a pre-approval, I recommend opening an account with a credit union. Do that, start building that relationship. Credit unions are so much more forgiving when it comes to auto loans. They're more willing to give it, and they're more willing to look by a few of these things in order to take care of their members. So if you can't get approved, you've been working on getting approved, the next thing I would do is build a relationship with a credit union. And before people blow up in the comments, I understand that people are going to say, well, why don't you just get a cosigner? I have dealt with people that have worse than stellar credit, and guess what? Normally the cosigner is hard to do. I understand that. If you can get a cosigner, that's the easiest way. But when we're looking at this, if you need a car today and you don't got time to wait and build that relationship, I would say find a car with under 80,000 miles that's a 2018, 19 above. I mean, wants to be under 5 years, and you want to make sure that you're working with that deal to negotiate. Sometimes it's even okay to let the dealership pick that car because they're going to find a car that they own well that they can sell at a discount. They have to have that LTV to around 125% of trade at max, which means 125% of trade-in value in order to get approved at some of their special credit lenders. And that's what they call it, people with less than stellar credit. So understand that this is okay to work with the dealership a little bit more. You want to make sure you're not getting hosed on the deal. But when it comes to people trying to rebuild their credit and you don't have a cosigner, you really need to work your best way with the dealership. Some people don't think you can negotiate these deals. You absolutely can. If you're not happy with the price of the car and it doesn't seem fair, negotiate lower. If you find the exact vehicle you want and you can get it to 125% of trade, even better. But work with your dealership, work with your credit union, and get 3 of the 4 legs. And I promise you, you're gonna have a 10 times better chance to get approved, and everybody's gonna love you. If you guys want more comments, tips, tricks, things like that, please comment, like, subscribe. Thank you guys so much and have a great day.